We're here today with Perth Tolle from Life and Liberty Indexes. Perth, I just want to start because the audience might not know the significance of your resume and where you've been. So I did some sleuthing, and I found some honors and awards and recognitions that you've just continued to collect. So I want to share this partially to maybe embarrass you, but also to let you know, the audience know the significance of your work and what's going on. So the first piece would be in 2020, you were voted 10 to watch by Wealth Management Magazine. In 2021, you were 100 people transforming business. You've spoken in front of Congress. The ETF.com award, you were the best new international and global ETF in 2019. You were Index of the Year in 2019. You have 3 and 5 year 5-star Morningstar ratings. You have a 5-star or 5 Globe Morningstar rating on sustainability. The assets continue to balloon. There's something great happening at your shop. Before we jump into kind of the capabilities of the index and the product you've built, if you would take us back and help us understand, I think there's some entrepreneurial stories that focus on life is up and to the right, the business is up and to the right, and there's this story from an entrepreneurial perspective that says, wow, wasn't that easy? So if you would, can you take us back to some of the stories, some of the milestones as far as where you've come from, and kind of what started the seeds that were planted when you were much younger to get you to the place that you're at today on the personal side?
Sure. So I started this strategy kind of because of my personal experience and also because of my experience with clients when I was an advisor. So I was born in China. I grew up there until I was about 9, and then I came to the US. And after college, I went back and lived in Hong Kong, where I traveled throughout, Hong Kong and mainland China, and I saw the difference that freedom made in my life and also in the markets in these various places, the US market versus Hong Kong market at the time versus mainland China market. And this was around 2003, 2004. So it was quite a while ago. And, while I was there, one of the things that really struck me is, I had some friends who, I was like 23 at the time. I had some friends who were just like me in every other way, just like all of my American friends, except these girls, they didn't have an official name, birth certificate, school records, hospital records. They didn't exist on paper because they were born the second child during the one child policy generation. And there are now 60 missing women in China due to this policy in my generation. So this is one of the things that really struck me as policies having an impact on the future of a country, of a society, of the market there. And now we see the biggest demographic crisis in the world caused by this, and probably won't recover from it in our lifetime. So that's kind of like the beginning of when I realized, okay, so governance on the country level kind of has an impact that may be overlooked by most people. And then when I came back to the US from Hong Kong, I worked at Fidelity as an advisor for about 10 years. And I was in the LA and Houston markets. I had a lot of clients who were from outside the US. And, I had a Russian client, for example, that said, I don't want to invest in Russia because it's like funding terrorism.
Hmm.
And that was 2014. So, that turned out to be very prescient. And I felt the same way about investing in China at the time. So there was no way at the time for me as an advisor, especially at Fidelity, where we had the models and, things that we presented to clients that were already kind of preset. So there was nothing that I could put the client in where he would have that diversified emerging markets allocation without kind of funding terrorism, without funding, Russia, China, Saudi Arabia, and so forth. So, and at the time, indexing and ETFs were kind of on the rise. And so I kind of just saw that there's this very beneficial vehicle, the ETF, for clients, and also, the power of indexing where, you have as much objectivity as possible. And it creates a very transparent, systematic, and low-cost approach. So I actually ended up leaving Fidelity, to stay at home with my young child at the time. And then when she started going to school full time is when I kind of went into this full time. And we created the Freedom 100 Emerging Markets Index, which then we were able to launch as an ETF. But that process is also, it's not as smooth as it sounds coming from this side of the adventure. So I created the index in between 2014 and 2017. It was in development, going very slow because I was a mom at the time as well. And 2017 is when we launched the current version of this index. And throughout 2017 and 2018, I shopped the index to most of the issuers in the US, the big ones. I talked to iShares, the little ones, and everyone in between. And literally no one wanted it. So everybody said no. There were a couple of mid-sized firms that kind of, had some interest, and we entered into conversations where they made me some very bad deals. And one of them I actually even agreed to, and then they backed out. So there was a lot of rejection along the way, and I actually kind of missed those days because that was like 2017, where everyone still wanted to invest in China. Nobody could envision emerging markets without China. And China, because of market cap weighting, has a massive weight in most emerging markets indices. So in the height of COVID, China had a more than 41% weight in the MSCI index. Russia, before the war, was in the top 10. Saudi Arabia is still in the top 10. And then the EM universe is just kind of rife with autocracies. It's, you got China, Russia, Saudi Arabia, Egypt, Qatar, UAE, Turkey. A lot of these countries that are just coming out of autocracies are still struggling to come out of autocracies. And then you have the very free markets like Taiwan, South Korea, Chile, Poland. So you have a big divergence in emerging markets that creates this exceptional freedom alpha potential that we're trying to capture in this product. So that's basically what we're trying to do, is capture that freest emerging markets country set for our investors, because we believe that those are the countries where we'll find the big growth stories of the future.
Sure. If you can go back to that entrepreneurial story, I'm curious, think back, who were voices that you trusted? Who were people that encouraged you through kind of the ups and downs of bad deals, people backing out of signed contracts, whatever happened? Can you speak to kind of who you surrounded yourself with in the product development, entrepreneurial kind of launching phase of the early days of Life and Liberty indexes?
Yeah, so I was actually, thinking back on those days, it was a lot of kind of listening to like an inner voice. Like, this is, everybody said I was crazy. So, I was at conferences trying to get the lay of the land, meeting my heroes, right? Some of my heroes in the industry who wrote all the books that I read about, ETFs and how, their origins, and people that if I named, you would know exactly who they are. We're hanging out at night in the conference hotel in the lobby. Somebody has their baby, and we're passing the baby around, just hanging out, and we're like, and telling people the idea. This is, I'm thinking of 2018 at this point. So before the ETF launched in 2019. So it's just an idea at that point. Doesn't actually exist as a product, and I'm just telling people so that anyone who's interested could get involved. And I remember, one of my heroes just like, that's crazy. That's a crazy idea. And then a few years later, I think when we were at like 200 million AUM, he was like, I take that back. So I saw him at a conference again. And so, I really appreciate all the feedback. In the beginning, I got a lot of criticism. And even after we launched the ETF, I got a lot of criticism and you get criticism from, people who are more experienced than you in the industry, and also from your people who actually just don't like what you do. And both of those are helpful. So, in the beginning, of the product, the voices that you hear, like, it doesn't always have to be the encouraging voices that are helpful. Those are helpful as well. But I think criticism is even more of a gift because it tells you, how to get better. So in the beginning, we had a position in the index that was a South African company, which all of its shares were invested in a Chinese company. So it was Naspers, and it was basically all invested in Tencent. And that was an investment that they made as a VC that worked out really well for them.
Okay.
But as a result, all of their assets were tied to Tencent. And so that's something that the quant systematic rules-based strategy did not recognize, but our critics pointed it out. And that was the most helpful thing ever, because then we created a rule that was applied across the board that said if all of a company's assets are tied to the assets of an unincluded country, then that position is not eligible for inclusion. So we could then create the rule, apply it across the board, and make a better product. So now that company is no longer in the index, and for good reason. And so I think the voices that you hear as an entrepreneur, like, I most appreciated the critics. But also I did have a lot of encouragement, and that's that I'm very grateful for as well. One of the two of the biggest voices I would say are from Rob Arnott and Wes Gray. So and then there's also like the Red Holes guys who are actually very encouraging and helpful. So I was fortunate because I talked to, I guess, so many people to meet a lot of people who were both critics and people who were fans of the idea.
Sure. Emerging markets strategies have a long history of state-owned enterprise. Can you speak to your strategy, your view, and help an investor understand the impact of state-owned enterprise and how your product views state-owned enterprises?
Yeah, so I should probably, just talk about how we get to the security selection. But yeah,
That'd
we
be
do
great.
exclude state-owned enterprises. So before we do that, obviously we have a freedom-weighted country selection that will generate freedom weights for countries based on their freedom scores, which we get from a third-party think tank conglomerate. So from the Cato Institute and the Fraser Institute, who compile both personal and economic freedom metrics. And there's 87 variables across various types of freedoms for 165 countries. And we just take the emerging markets universe out of that and use, apply freedom weighting, which is our methodology that generates freedom weights based on their scores. So, countries like China, Russia, Saudi Arabia are automatically excluded because of the freedom weighting process, and that process only takes the freest countries out of the eligible universe. So once we have that freedom weighted country weight, it is a top-down approach, and that country weight does not change with security weights. But on the security level, we do exclude state-owned enterprises. So we take the top 10 largest, most liquid securities within each market that's included and exclude state-owned enterprises. And that's the only thing that we do on the security level. And that's just to bring the economic freedom theme all the way through. And the thinking there is basically that the less government interference in private market activity, the better, and the more efficient it is. So, freer countries use their capital more efficiently, and freer companies, companies that are not, divided in their objectives, so like not putting the state interest first,
Sure.
are more efficient in their use of capital as well. So that's the thinking there.
Okay. Tell me, when you look at your history now, are there countries that you've seen kind of move in and move out? Tell me what you've understood about rebalancing and companies, but also the country weightings. How have things evolved and changed over the years? Just curious.
Yeah, so we found that when freedom increases, it happens very gradually, and when it decreases, it happens very quickly. So with the countries in the index, the top kind of freest countries kind of always stayed in their kind of top 4 or 5 spots, and the bottom ones are the ones that come in and out, because remember, the algorithm includes the most free country set in the eligible universe. So the countries that have an above average score among their, eligible country peers. So if your score is right around average, sometimes you're in and sometimes you're out. We do have a buffer rule that keeps countries from falling out too quickly, so to avoid unnecessary turnover. But one of the countries that has been going in and out is India. India is right at the average of the eligible about 18 country universe. And this year it's out, last year was in. And so India is a country that, I actually personally have, I'm bullish on. And I have very high hopes for, and it is the largest, oldest democracy. They have had some issues with, blacking out the internet in places that had farmers' protests, more interference in media than previous, and more repression of the Kashmir peoples, their minority people group. And they've historically had very high tariffs and non-tariff trade barriers. So been very protectionist in their trade policies, which has not helped their economic freedom score.
Sure.
But I think that their population story is a powerful one. They just, exceeded China in population. And the trajectory is good there. So I think demographics are very favorable for India. And, I'd love to see them come back into the index. But my personal, opinion doesn't factor in to the methodology at all. And so this year, India is out. Some years it's in, but when it is in, it has been a small allocation. So that is one of the things that is different about our index in addition to everything else.
When you look at investors having the unique experience of having been an advisor and now representing the product side through the index, what do you know to be true about U.S. investors as far as weightings to international and emerging markets, as someone who cares deeply about the opportunity within emerging markets?
Yeah, so I think with emerging markets, there's just this huge opportunity besides the diversification aspect, right? It's non-correlated or less correlated to U.S. Stock market, but it's also coming from a much more favorable valuations and a much lower base. So if you have a lower base, that freedom premium is kind of amplified. And not only that, but as we mentioned before, the divergence in freedom levels in the emerging markets give us that opportunity for alpha capture based on the freedom premium. So that opportunity doesn't exist in any other asset class. So we've been asked to develop develop market index using the same kind of freedom weighting strategy, but we haven't yet, and we still may. But in developed markets, all the countries are pretty homogenous and fairly free. Okay, so there's more divergence now that we're seeing than before, but nothing like in the emerging markets, right? So emerging markets are highly divergent in freedom levels. Developed markets are less divergent, but in emerging markets, there's that huge opportunity set to benefit from that freedom divergence that exists there.
Sure.
So that's why we focused on the emerging market space, and that's why the emerging market space is kind of the sweet spot for kind of this particular strategy.
When you think about the headlines that investors that are thrust upon investors as far as growth versus value, large versus small, dollar in favor versus out of favor, commodities are strong or weak, can you speak to what you've noticed about the consistency of the portfolio design and the stellar returns that your index has continued to rack up? Just curious what you've seen.
Yeah. So, all the things that you just mentioned are the things that, we watch once the basis of foundation is in place. So what we're doing here is, we're in the countries that no matter what the next, big thing is, whether it's AI, whether it's commodities, whether it's, something else, these are the countries that are more flexible to respond to global trends, and trends in their own countries. So countries that are more free for individuals and investors, people on the ground have the capability to make decisions about how best to allocate their resources to respond to these global trends versus for example, central government coming in and telling people how to allocate their resources and respond to trends. So it's a much more efficient and effective way to capture whatever the next big thing is. So we don't know what that's going to be in the future, but we know that in this strategy, we're in the markets that are best positioned to capture those trends, whatever they are.
Love that. Perth, you tell this story about a book in your childhood home. Um, I'm just curious, can you retell that story, but also through the lens of one, two, maybe three character traits as far as the role of family and setting that have kind of shaped you and what you've learned through that? I'm just curious. Can we go there?
Wow, you dug deep. That's not something that I tell often. So I know exactly what you're talking about, though. So you're talking about when I was very small. I found a Bible in my grandfather's library in China. Is that
Yeah.
okay?
Yeah.
So, so when this is maybe I was like 4 or 5. I was in my grandfather's library, which is kind of like I say library, but it's like the living room with some bookshelves. So, and there was a book. I just kind of picked it up and opened it, and it was about, two people in a garden. I had no idea what that was about, and I, asked somebody about it in my house, and people got very nervous and took it from me, and I never saw that book again. Now coming to the having grown up in the US now at this point, and I'm talking about something that happened 40 plus years ago. So now I realize what the book was, and it was a Bible, and it was not allowed, right, in China. So my grandfather, when he was in the war, his life was saved by a Christian missionary doctor. And so he had this was a kind of famous like missionary or something, and he had a picture of this doctor, actually a bust of him, like a sculpture, on the top of this shelf.
Okay.
And I guess he had a Bible as well, perhaps from this guy, perhaps not. I don't know the backstory, but that was like not allowed, and it was very clear to me, even as a child, that even in your own home, you don't have that freedom of expression, that freedom of, in this case, belief. So you can't have stuff like that in China, and this is actually, in the 80s. So when China was arguably in some ways freer than it is now, or on a better trajectory, I should say, than it is now, as far
Sure.
as freedom goes, both personal and economic freedoms. So so that was something that kind of made me realize, okay, freedom of expression does affect your daily life, and even things that you can or can't pass on to your grandchildren if you want. So,
Yeah.
so that's something that I don't remember very often, this story. So thank you for bringing it up. That's
Uh,
fun
in
memory.
this day and age, there's lots of tags around products and investment styles. ESG, SRI, some come in favor, out of favor. Is there anything that you find helpful in identifying and telling the story of good capital, of good allocation, of good investment choices?
Okay, perfect. So the ESG tag, was something that was kind of up and coming when we started this in 2019. So it was the next big thing in the investment space, kind of the way that private credit and private equity is now, right? So people are always trying to package something in our industry, it seems, to justify higher fees, right? So so whatever you can do to justify higher fees is what's the next most popular thing. And this is kind of product development driven versus client driven.
Sure.
ESG was client driven, but I think that the tag itself wasn't useful for our strategy because we don't use any security level ESG metrics, because in emerging markets, you don't even have that, foundation, the basic freedoms in place. Sometimes you can't even, have a Bible on your bookshelf. You can't even, talk about, policies in the country and things like that. So if you don't have freedom of speech, expression, media, especially media, you don't have any independent verification for the data that comes out of companies or out of governments on which investors rely to measure the impact of their investments. So if you don't have that data that is reliable and transparent, that you use to measure your impact, then ESG is kind of meaningless. So at the time when all this ESG stuff was very popular, we actually tried to distance ourselves from other emerging markets ESG products because, for example, the biggest one at the time, iShares, ESG aware emerging markets, had in their prospectus, we cannot deviate more than 100 basis points or 1% from the parent index as far as country allocations. So if the parent index had 41% in China, they can have between 40 and 42% in China. So, we thought that was kind of meaningless when it comes to emerging markets investing because, if you have no alcohol, tobacco, or gambling, but genocide is perfectly fine, that's not really capturing what most investors are looking for.
Completely reasonable. I'm glad you said it that way. I'll transition a little bit. There's the voice of Morgan Housel, who's an author I really like, and he speaks about the personal finance very well. And one of his more famous quotes is, "The most valuable financial asset is not needing to impress strangers." So I'm curious, when you're having this rocket ship of experience as far as the continued growth and attractiveness of your index and your products doing great. You've mentioned your child, the conversations around personal finance and what success looks like. Is there any money script? Is there any story that's kind of this reflection of you talk about your grandparents, your parents? I'm just curious, is there anything on the personal finance that tells the story of what you're building that's maybe countercultural, that's reflective, that's honest, that's authentic for who you are?
Interesting. So I love Morgan Housel, and I see his books. Actually, speaking of being a parent, I see his books in other parents' homes. So I'll be like, "Hey, I know that guy." So and also Morgan and I have had just in passing quick conversation about how weird things are when you find success, right? So and I think Morgan's tweeted about this before. Nobody's ever written a book about success, and of course, right now, and especially in finance, we know that the market can turn every which way in the short term. Anything can happen. So I'm extremely pleased that the thesis for our product was proven in such a short time. But I always warn investors, like, this is not like we had extreme success in our life history, which is now about 7 years. And I always expect that freer markets will outperform in the long run. But you can definitely zoom in on those certain periods and see periods of underperformance. So like 2024 was a period of underperformance because China outperformed that year and we didn't have any allocation to China. That's the strategy. In the beginning of 2020, so first half of COVID, you saw underperformance because China outperformed the world. But then, in periods of recovery, the freer countries really shine. So second half of 2020, 2025, these types of periods where, the freer markets really kind of outperform. And even, in 2025 was an anomaly where China outperformed broad emerging markets, but we still outperformed both broad emerging markets, ex-China, and China itself. So it's not just a China story. And really, you've seen the freer markets, they have more sustainable growth. So their growth is not debt-driven or state-mandated. They have more resilience. They do recover faster from drawdowns. And that's really what investors are investing for. If you don't believe that there's going to be recoveries, why are we investing, right? So that's where we want to be. And then, the more efficient use of both, human and economic capital. There's less capital flight and capital destruction. But also we see institutions, the strength of institutions and checks and balances kind of showing up in some of these emerging markets better than developed markets sometimes. You saw, in South Korea last year, the guy that, declared martial law just unilaterally, now he's in jail, right? So the president. So these types of things, Chile past few years had a very anti-business government who was unable to accomplish anything because anytime they came out with a referendum, the voters came out in droves and voted it down. Poland, now you see a lot of government accountability. for some more checks and balances than they had in previous years. So all of these kind of are stories of stronger institutions, stronger rule of law, stronger protections for individuals and investors, that has led to better returns. But everyone's a genius when the market's going your way, right? So right now is one of those times, and we know that we can't always expect that. So the strategy is designed to kind of track the broad emerging markets more closely than it has been.
Sure.
And I think investors should expect that the returns that we've seen, don't expect that every year. But
Sure.
in the short term, anything can happen. In the long run, absolutely, we expect the freer countries to be the best places to capture emerging markets growth in the next decade.
Love it. Perth, I've been a longtime fan of your work, so thank you so much for joining us. If you would, everyone should be reading and following you. So can you tell the audience website, LinkedIn, how can people find you?
Yeah, so freedometfs.com is the fund site. Life and Liberty Indexes.com is the index site. I am on LinkedIn and just Perth Tolle, and on Twitter, same handle.